Folks! Folks! Oh, that's pretty good. Folks! How's everybody doing? My name is Rudy. You're watching Alpha Investments. Today we're not really going to talk about any of the cards, all the rumors and speculations of everything in the card world. Today is just going to be a generic financial video. Sit back, relax. If you're looking for an update on the murders of Karlov Manor and all that data, that'll be next week. If you're looking for updates on Pokemons and rumors and Fallouts and MetaZoo's being bought by SpaceX now, and Flesh and Blood is now going to own the world, and of course Disney Lorcana's print run is in billion boxes. Today we're just talking about general finance and the mindset I feel that we should all have going into this 2024 new market cycle. So first, let's talk about Wall Street a little bit. We have the overall stock market definitely very far out of the bear market that we went through for 2 years, from the May, June of 2021 all the way through the end of 2021. 2022 was a disaster year. 2023 was pretty much a bad year in Wall Street, except the last couple months, which was Q3, Q4 of 2023. And the market has been rallying since. The S&P 500, overall Dow, maybe not the Russell 2000, maybe small mid-caps, internationals, there's still a lot of weakness, but obviously the mega-cap tech stocks, NASDAQs, and the overall SPYs are doing extraordinarily well for the wealthy and the people who have a lot of exposure in these traditional asset classes. I want to discuss what that means kind of for the cardboard world and what I see happening. So remember, in really good times of euphoric, easy tendies, everybody's going to be a billionaire because of NVIDIA. Everyone's going to be a trillionaire because tech stocks are only going to go up. And every tech stock is going to have a market cap of endless trillions and zillions of dollars and just endlessly buy, because all these Googles and Amazons and Apples and Facebooks and, of course, NVIDIAs, and they just go straight up and they never go down, blah, blah, blah. That is the internet's mindset right now. I just want to remind everybody that, yes, a lot of people are making a tremendous amount of wealth from that bull run and that euphoric move and the AI boom and all this new artificial intelligence, fairy dust and everything. I just want people to remember that in times like this, where people are showing you screenshots and making insane percentage gains. We're not going to talk about raw dollars. And Wall Street cares about percentages. You know, when you have these crazy stock charts of NVIDIAs and Amazons and Facebooks and everything, just remember, folks, what you're seeing there, I mean, sure, it could keep going for a long period of time. No one's arguing that. But just remember, folks, these kind of euphoric, endless to the moon things do not last forever. These are momentum things and hype and everything. All the money is flowing to a couple stocks on Wall Street, and I encourage everyone to be very cautious. They could keep going for a week, a day, a month, 6 months, a year, 5 years. Who knows? That tomorrow morning, after you watch this video, the whole market could collapse. We have no idea, and nobody on this planet can predict the overall direction or the exact closing or opening price of the next day, next week, next month of the S&P. Anyone who claims to sell you stuff like that, you need to be very careful of. Remember, Wall Street in general, mutual funds, alternative asset collecting, the cryptos, the real estates, you know, the actual bond market, collectibles, you know, even graded currency, graded video games, you know, all these other categories. You know, the goal of professional money managers is usually to either just beat the S&P 500 or what, make 5, 10, 15% a year. So when you have some people making these 100, 500,000, 5,000% returns because they're doing options or derivative gambling and betting, please, in times like this, use caution. These type of situations are not sustainable. You'll see things on Wall Street Bets. You're going to see people saying, why should I buy Rudy's new, I don't know, Magic the Gathering, Hasbro Fallout thing, or Karlov Manor, when I can just buy NVIDIA and I can 10x my money by next week? And that may happen. That could be a fact. Nobody fucking knows. That's not really the point. The point is, in times like this, our expectations get blurred, okay? And I'll say it, in Magic, a little bit of cardboard talk, we are seeing a lot of upticks in a lot of collector boxes and sealed boxes. Now, again, they've gone down for like 2 years in a row, so even an uptick's like, whoa, yay. You know, but just remember, when we have these strings and periods and these you know, string of days stuck together, of insane profit. And you see it all over CNBC, news websites, headlines, and so-and-so stock, unbelievable, so-and-so stock, unbelievable, Facebook stock, Google stock, Apple's and Amazon. Just remember, they are the hot flavor of the month right now. In finance, there's a thing called rotation. As we experienced the last 2 years, in the cardboard CCG world, the last 2 years was out of favor or out of rotation, where the bear market and money just constantly left the collectible card world. That money has been flowing to other categories. Real estate hitting all-time highs. Now that interest rates have gone up a lot, people are hiding out in cash, making 5% for free in high-yield money markets, and they're FDIC insured or SIPC or whatever these thing is, depending on what you have it sitting in. Or people just have their money in some fixed income locked in for a year, a CD for 2 years. And, you know, these things are all great financial instruments. But things are going to change, okay? A year ago, everybody wanted oil stocks. Exxons, Chevrons, ConocoPhillips, Phillips 66, the BPs, the Shells, the big Halliburtons, you know, Schlumberger. These conglomerates of different energy oil-related companies became very popular again. They had a huge run-up, you know, especially coming out of the 2020 crashes and everything. But then oil now became out of favor, and it's held its own, but it's pulled back from the highs, and now money's flowing back to another direction. Same thing when you look at like different sectors of the market. You have things like healthcare, retail, small cap, mid cap. All these other sectors are very, very weak. So on the surface, you go, wow, look how good the stock market's doing. The economy is finally doing better. That's a stretch. Wall Street doesn't always represent Main Street, and that makes a lot of regular investors struggle to be good investors because you go to your regular life, you turn this video off, and you finish fondling your left nut, and you go out in the real world, and you say, damn, Rudy, things are still pretty crappy out there. But the stock market's hitting all-time highs. Yes. Disconnects between Wall Street and Main Street are historically normal. Wall Street tends to be 6, 9, 12 months in the future and tends to not care about your local economy, your local city, town, city, state. Your local area could be a disaster, homeless, you know, tent cities, bad local government, unemployment. No, you could be in an area that just is absolutely doing awful. And then the Wall Street's like, boom, all-time highs, America to the moon. And, you know, it makes you think, oh, I'm going to short the market because, I mean, things are so bad out there, that market is not going to stay all-time highs. And then you place a bet because you like to say, you know what, I'm going to leverage up to options contracts and I'm going to watch my theta decay. No Greeks, sorry, no Greeks. You know, I'm going to place a bet that expires in a week and the market's going to crash. And you're wrong, and then your account goes to zero. So, a reminder again, back to the beginning of the video. We're in a new market cycle. It does appear money is flowing back into collectibles for the first time. In my opinion, it looks like there's a net positive of player increase and money increase going into the market versus sellers looking to leave the market when it comes to Magic the Gathering. Now, that also means that, what do we have coming up? We have later this year, the government and the Fed expect to do at least 1, 2, or 3 rate cuts later this year, not now. So most likely, everybody hiding out in cash, getting their free 5% or bonds or whatever it is, that free 5% is probably going to go down to 4, maybe even 3.5% in a year or two. And as that free tendies of cash for wealthy people who just put their $1 million getting 5% and saying, wait a minute, I put my $1 million over here, I get 5%, I'm insured into this money market, so 5% of $1 million, I get 50 grand a year for just waking up, watching Rudy, jerking off the tacos, and doing nothing? Is this, wait, 50 grand a year, I get over 4 grand a month before tax, unless it's a tax-free fund or some, you know, muni bond. And I'm just sitting here going, okay, well, it's great. So now, when that 5% goes back to 4 or 3s, and then your 5,000 or 4,000 a month goes down to 3,000 a month or 2, you know, all of a sudden that money's going to say, well, this kind of sucks now. I don't really want to sit here. I'm not making much anymore. Let me do something with the money. Smart money sees this coming, and they tend to beat the curve of the regular investor, and they're already moving money around. We are seeing that already with money continuing to move into Wall Street, specifically equities, because the smart money and institutional money is probably making a lot of adjustments, knowing that yields and fixed income and the risk-free rate, 5%, is going to be coming to an end and slowly dissolving back down to maybe 4 and 3. Now, obviously, 3% for free sitting in cash versus 5%, that's almost half the amount. Now, to a normal person like you and me, who, let's say you put 10 grand in there and I get 5%, oh, great, I made $500. Oh, wait, now if they cut the interest rates, I only make $300 because it's 3%? To a normal person, $500 in a year down to $300 a year, you're not really going to care. It's not going to change your overall behavior, and you're not going to do anything. Now, if you're an institutional money manager, or if some sort of analyst or some sort of individual who's managing risk for a firm or fiduciary for someone else, or a fund or an actively managed hedge fund or whatever, if you're involved in something bigger, you at this point in time are already making moves. Hence, you're putting money into equities. You're moving money to other categories. Maybe you're looking at real estate. Maybe you're looking at alternative things. The big thing, Wall Street, now we have Bitcoin ETFs on Wall Street. Spot ETFs, by the way. So that means that a mutual fund, an actively managed, I don't know, a strategy, hedge fund, I don't really want to get too deep, they have the ability to move X amount of hundreds of millions. If it's a $1 billion fund, they can move 100 million into a Bitcoin spot ETF and have exposure to crypto or Bitcoin. I don't really consider a lot of crypto that most of it's trash, but say Bitcoin. So that's an option now, okay? Especially as yields go down. Now, that also means that people can look at real estate again. People can look at different collectibles. It could be currencies and video games and stamp collecting and blow-up doll collecting and card collecting and video game collecting. There's so many categories that people can look at. And I believe it's important for everyone to remember that looking at the CNBC and these tech stocks that are making you 20%, 50%, 100%, I'm up 300%, I'm up 1,000% because I leverage. I encourage everyone to please be careful, because remember, the gambler's fallacy on the internet only reports one side of stories. Okay? On the internet, good example. The internet and the people who don't know who I am believe that, oh, Rudy just endlessly dumps new product to everybody and then buys oil paintings from the Pope and the King, and then after that he hoards reserve lists and he makes sure everybody else goes bankrupt. So people who don't know have certain assumptions of how things work. People don't realize that, sure, I sold a bunch of Ixalan boxes, and I may have made $40,000 making $5-10 a box just selling thousands of boxes. And then I ran, I don't know what a good example is, a Baldur's Gate collector boxes. And I lost $80,000. Or Commander Masters, which I sold collector. Somebody, if you're a patron and you're still here, what I sell Commander Masters collectors for? Weren't they $179, $189, or $199? Again, if you had bought that, you'd be down, what, 10% right now? And you don't make any money. And then the collector boxes and Commander Masters I got stuck with, well, it's just dead money. So on the surface, it's important to remember, things feel a certain way, and the internet only reports results and perspectives out of context. Let's go back to Wall Street. So people online who want to say, hey, sign up for the Rudy Patreon Get Rich Quick stock program, and I'm going to teach you how to trade stocks. Well, stop right there, Timmy, because you're already getting scammed. There is no Get Rich stock program, Get Rich Rudy Sells You Cardboard program. It just doesn't work that way. I'm no different than every other 3,000 people who are stores in the United States or Walmart that sells you cards. Some go up, some go down, some just stay the same till the end of time. If you like it, you should buy it. If you think it's going to go up, you should buy it. If you think everything's going to zero, well, just make sure you do something bad. I don't know. But that is the context of a free market. And right now, on Wall Street, all everybody cares about is posting these crazy screenshots of making $10,000, $50,000, hundreds of thousands, $1 million betting on tech stocks, that the technology stocks, they keep going up. And everyone's like, Rudy, I bought 10 Lambos, one of every color. I contacted every one of your ex-girlfriends, Rudy, and I flew each one out because I've made so much money on Wall Street instead of cardboard. In times like this, you should be proud that some people are being very successful. I'm happy to see that there's other people hitting it big. That's great. But you're not seeing the tens of thousands of people getting wiped out or betting the wrong side of the trade and all these things. You're not hearing all the stories of people going to zero. So again, it's important in moments of euphoric financial times, markets, that stocks do not just go endlessly straight up without having corrections, slowdowns, or market cycles. They say, okay, you're done going up. Now it's time for, I don't know, retail Walmarts and Targets and Sears and Kmarts and Blockbuster stocks to go up, retail stores. And all of a sudden, that's the flavor of the month or the quarter or the semi-annual year. And then it can go to commodities. Then it can go to back to technology. Maybe it goes to small cap. Maybe it goes to just some sort of healthcare, pharmaceutical. You know, I just want people to realize these things shift rapidly. And there's no way to predict it. When institutional money wants to move billions, they're going to do it. And you're going to see a vacuum out of tech. And you'll see vacuuming into healthcare. That is always how it's been. But it's important to remember, I think right now, over the coming last few weeks and the next few weeks, you're going to see a lot of push about getting rich quick again in the stock market because we're seeing absolutely insane stock price swings on these mega cap stock company or tech companies, being led by AI. Rudy, magic cards going to zero. AI! Everything's going to zero, but Rudy just said artificial intelligence. If you say AI, everything goes up. Penis, AI penis. You know, so just remember, folks, please keep a level mind and head, even if you're doing well, even if you hit it big. It's not sustainable. Markets shift. And it's important to remember, if you're trying to build wealth long term, that sweet spot of like 6 to 8%, averaging 7%, trying to get to that 9 to 10% a year is a beautiful thing. And I know to most people, you know, but just that is usually, or as other people would say, trying to just either match or beat the S&P 500 on a long term. But it can get very distorted. Like we saw this in 2021 in finance, where a lot of money was just going crazy into all the collectible markets. Video games, the Kickstarters, the MetaZoos, the Flesh and Bloods, and there was like 80 other Kickstarter CCGs that I got packages from almost on a weekly basis. And then you had all the real estate going straight up because rates were at zero, and all these institutions and hedge funds like, well, we got billions. Put it all in real estate. Force the house prices up and we'll make money there. You know, the money always flows in the path of least resistance. And eventually, as it keeps flowing in that least resistant path, more resistance builds up and the money flow starts to wiggle around the rock and go to a new path. And right now, the hot stuff is technology stocks on Wall Street. With a side of real estate and rates coming down some. And now we have Magic the Gathering having its first signs of a lot of positive upticks after a 2-year crash in Magic 30 and bear markets, all the shit we went through. So we see that teeter-totter start to move again. So remember, folks, if you're doing well out there, that's fantastic. But do not get overly blurred on crazy percentages, crazy swings, and crazy things like that. Do not overly speculate on the new hot thing, whether it's AI or whatever the next hot thing's going to be. You know, just remember, folks, these markets can stay irrational longer than you can stay solvent. If you're leveraged, these markets can stay wrong or they can stay distorted longer than you can pay off your margin loan or your credit card, you know, interest rate. Things can be very dirty and they can stay very bad for longer than we want to admit. And that brings me to something I'll share with you all. One of the main reasons I have been able to navigate so many ups and crashes in the collectible card world. I think this is my 4th Magic downturn collapse, and maybe like 2nd or 3rd Pokemon downturn. The reason I'm able to navigate that is because I never believe in leverage. And if I have to take a temporary piece of leverage, it gives me anxiety, and I do the best I can to immediately get out from under it. And that, whether that's a house, mortgage, you know, credit card, I don't have any debt or liens on anything I do. If I hit something big and, you know, we have a blowout Magic thing like Lord of the Rings in the summer, where we were actually able to sell a product and make like literally like a 35% profit margin on a Magic product. Again, it's like winning the lottery trying to actually have a product where you can actually make more than like, geez, $5 a box. But every once in a while it happens. And of course, in those times, the internet gets very angry because that usually means the prices are expensive. And then you have the Timmy Game Piece army tend to start getting angry at stores and boycott, review bomb. You'll start to see stuff like that. And to remind you, one of the reasons I've been able to navigate and survive it, no, it's not because Rudy was born into a trillionaire private jet, spaceship company. I wish. I'll be honest with you all, if I was a billionaire and I was born to something like that, you all would never have seen my ass on the internet, because I would not be living through constant negativity and problems. I would have never started a YouTube channel if I was a billionaire already. I would have stayed off the grid and just watched the world from the distance. Unfortunately, I wasn't born into some trust rich thing, and I had to build everything myself. And going through something like that, you learn a lot of lessons. Like, again, the old videos on this channel, I shared with you all how many I've almost bankrupted myself, twice. One with the corporate debt, fixed income, casino bonds, and actually over leveraging into corporate bonds. Thankfully, it worked out. I don't know how, but barely. And that was 10 years ago from now, or 10 years ago from today. Jeez, I'm getting old. But it's one of those things where when I did hit something, like whenever I hit something that's successful, Lord of the Rings, I couldn't believe it. We have a summer set, and oh my gosh, they're pushing $450, $500 a box. And I was like, okay, we're going to do a small thing. We're going to limit how many boxes I sell per person. A little 2-box thing. I'll take off like $50 a box from TCG Player. We'll sell a little 2 thing. And holy crap, I'll actually make like $100 kind of per box. No, per order? Per order. So I was going to make, it was like a 28% profit. I was like, whoa, that never happens. And the Patriots still got like $100 off TCG Player. Like, black swan events like that are incredibly rare. Like, I've ran over probably 400 to 500 sales online to patrons and you all in the last 7-8 years I've been on YouTube. Now, out of those 400 to 500 sales I've ran, some of them, the top sales, the top performing, and the worst performing are very extreme. There are top performing MetaZoo where people 10x their money. Top performing Flesh and Blood, people 10x their money, made insane tens of thousands. And then there's Flesh and Blood sales like Monarch, people lost 90% or 80%, 80% of their money. And then like MetaZoo, is it at 0? Or are they going to lose 80, 90%? So out of these 400 to 500 sales I've ran, there are a handful of these hundreds of sales that have done crazy price swings. Now, out of the other 400 to 500 YouTube sales and patron sales I've ran, the other maybe 450 out of 500 sales, they've done normal behavior. They stayed flat. Maybe they dropped 10%. But most, because I've been doing it so long, are maybe up like maybe 10, maybe 20, 30% over so many years. They've performed, but it's not been drastic. That's the average item that comes out in our society. And that's the way it should be. Now, why people find that to be weird or some things skyrocket, some things tank. Maybe people just don't know how markets work. But that's a free market, and I hope it always stays that way, because that's what makes life worth living. We don't want everything to not be a free market. So, backing up again, the reason I've been able to handle some of these nasty, nasty downturns is simply because I've been able to work and build long enough. Card World almost 20 years, YouTube and Patreon 7-8 years now. I've been able to get to a point where I have stability, and when I hit something big, Lord of the Rings, and I'm able to make $100,000 on a Magic release. I think that might have been like the most I've ever made on a Magic release. Boy, it'd be nice to do that on a regular basis. But I immediately took that money, and I put it aside, and I waited for other sales, or like a distributor clearance, or a Magic downturn, and people are selling their collections, and Evil Rudy he only paid me 62 cents on the dollar. Yeah, just like everybody else at, every other store in the country, that we're all terrible people. I wait for opportunities or a collection, maybe a $5,000 Magic collection. And I say, wow, that's a kind of a set of antiquities. And it's, whatever the condition is. Let's say it's $5,000 and it comes along and I'm like, oh, all right, cool. Yeah, I'll give you $3,000 for that, and I'll even give you the Rudy shipping label. And the person says, dude, done. Give me $3,000, I'll send it over. Kind of one of those things. And I kind of wait for opportunities, but I never over leveraged. I never created tremendous debt or anything, because at any time, as we've all learned, these companies can just hose all of us. These companies, Sometimes they do beautiful things. Exelon release, beautiful execution we talked about in the other video. But then other times, these companies can be so stupid. The Hasbro, the Magic 30, Mark Rosewater, we're never reprinting collector's edition, even in a different non-term illegal back. Fuck that, we're doing it anyways. MetaZoo, haha, fuck you all suckers! You have these companies that say, internet says we need more boxes. No one can get our products. We should print another 1 million boxes and just fuck the whole system into game pieces. Because they gotta be available, right? That's what the people with the 15 roommates in Taco Bell and complaining on the plumber is still yelling at Rudy for. And then it collapses. And then when it collapses, they try to release a new set, and there's less pre-orders. Then it sells even lower. Then you snowball down to bankruptcy. And then the economy and the secondary market of the CCG drops the first seed. It just becomes a card game or a living card game, and they're fucked. And it's one of those things where I've done this long enough to know that the people who do stand the test of time are far in between. Most people do not stay in the card world past a single market cycle of 1 to 5 years. Usually once some things get bad, or the running to Target in the morning and waiting for them to restock the Pokemon on the shelf and fighting the other people to get a pack, and then flipping Evolving Skies on eBay, it's not sustainable. And it never is. And then when the future gets here, oh look, Scarlet Violet's printed more, everything tanked. Oh look, 2 years of a bear market, all the sealed boxes from the last 10 years have dropped 10, 20, 30, 40, 50% from their highs. Oh, see, it was all trash. Let's just dump it all to Rudy now. This is normal. And I don't know why every time we go through these ebbs and flows, people get so Pikachu shocked face of, oh God! I'm trying to get that in my thumbnail. I don't know why people become so aggressively emotional about it. Because as we go into a good cycle, people forget, or maybe those people leave and we get new people. Maybe they haven't experienced it. And then eventually, in a few years from now, if we boom, 4 years from now, we're probably going to have another pullback or crash. And history is going to repeat and the wheel in the sky keeps turning. And I just want you all to know, if I was leveraged with all the product you guys see in different videos, on those downturns, I'd be done. I would disappear. I guess I would ghost you all and disappear. But, I've done this long enough to know that even when I hit it big and I'm able to make I'm picking on Lord of the Rings, even though still a good product. I'm sorry to pick on Lord of the Rings. But even when I hit it big and make something on there, oh, let me use another good one. You guys will like this one, but, well, we're too late in the video. The angry people are gone. I'll use it anyways. Like when Rudy made, hundreds of thousands on the early day when Monarch skyrocketed and I was able to make huge, $500,000 profit on Monarch kind of thing. Let's just say it's an even $500,000. I don't know if it was a little higher or lower. It was amazing, right? Everybody was happy. Some people who flipped it at that time and they made 20% more because everything was so high. There were patrons that would take the Rudy $1,000 kit. They sold the boxes, sold the promos and the playmat. They turned into $1,300. And it was just the way that market and the way the market priced things. But it was funny because at that time, I was like, wow, I've never had a sale where I've made that much. Pre-Lord of the Rings. And it was one of those moments where I was like, I don't know if this is going to be sustainable though, because this is just, it doesn't feel sustainable. And sure enough, then after that, as Monarch came down, smart man Rudy, who has inside information, is on YouTube every day for 9 months saying, I will buy your Monarch first edition boxes so you don't take the loss, because the prices kept dropping. And they went from $600, $700, $800 a box down to $500, $400. And I started offering to buy everyone's Monarch first edition for $200. So then I took a huge brick of that money I made the first time, started buying Monarch back, and then it goes from 200 and keeps fucking tanking to 150, 100, the print run comes out, the market gets to a bear market, and then flesh and blood and investors say, fuck you, I quit. Then the market got worse, and then I lost a lot of that money. So it's kind of one of those things where it's like, even when you come into money, this is the lesson of the video, so then we're going back to general finance. When you come into money, you have to understand that just because something executed in a beautiful, and you made money, you can't just blow it all and act like this is the never-ending story. You must prepare for the next downturn, screw up, Rudy mistake, Rudy scam, or a company going under, or a collapse, or hey, by the way, we lied. Yeah, we secretly found 100 pallets of Monarch in the back, even though we told everyone we are sold out over here at so-and-so company that we shall not name, and the other company we shall not name on YouTube. And suddenly they had a bunch of it. And, you know, it didn't work out very well for me, and I lost a lot of the money I made on it, and none of it was really worth it. The only thing that's left now are just people who still like to bring it up to me and how bad of a person I am. And that's just part of something, that's part of life I have to live with. But it just sucks because it shows that the ebbs and flows, the market gives and the market takes back, and, you know, a fool and their money are departed, and that includes me. So the point was, if I was leveraging these downturns, like in the last 2 years, if I had 2-3 million in debt at 2-3% interest, and these rates went up, and I got hit with 7 to 10% interest, I would have been bankrupt. I would have been wrecked, folks. I don't know. I probably wouldn't be able to recover anything. But, you know, I've been through previous cycles and booms and busts so many times. I've learned to prepare and embrace and change how I view finance. So now, in the last 2 years, all I did was Evil Rudy was buying collections for 61.69 cents on the dollar. He was expanding inventory, positions, and talking to you all about how bad things were. You shouldn't sell unless you have to. And then, of course, we get to today. Don't forget all the videos where I was yelling at you all for 18 months to buy something because it was so bad and things got so cheap. But most people didn't have the extra money because the economy just got so ridiculous with inflation, cost of living, and job losses, you know? So you're supposed to rewire how you see things. So to zoom out in the video. To sum up the video, which means we're halfway. To zoom out in the video, when you go through these 2-year chunks of bad times, the correct thing to do is those are accumulation phases. It could be Bitcoin, it could be the S&P 500, it could be real estate, it could be Magic the Gathering. The key is diversification, the only free lunch in investing, and of course accumulation during periods of time when the prices are not skyrocketing. This is what we've discussed in the last 2 years, even though everyone just decided to be, oh God, oh, it's all set. Hey, you gotta sell everything, it's going to zero. What do we do? I got a closet full of boxes. My boxes are zero. I'm at -5. The boxes are billing me every month. You know, you see the noobs, the Timmies, the pitchfork game piece people, and you see that tug of war happen. And now, as we've left that, the S&P 500's all-time highs, Magic the Gathering, we're on a multi-month uptick across the board. And now things look pretty good. And now I expect another 3 to 6 months of gains before the average person realizes that they're going to have FOMO and missing out. So the average person will wait for a lot of upticks and gains to happen. They will miss out on that, and then they will eventually say, gee, I guess I'm missing out. I better buy something. And maybe then they start buying the S&P 500 after it's rallied past records for 2 years. And that's why the average person always struggles, because it's not really the average person's fault. It's the mindset. And human beings are wired mentally, and we are designed out of the gate, without training and teaching and market cycles and experience, we are designed to do shitty jobs. We are designed to make poor decisions. And we are designed to run businesses into the ground because we're lazy. We tend to choose paths that seem right in the moment because things are good, but we don't realize the risk we're incurring. We don't realize the damage that we are taking on long term. We don't realize the side effects that may unfold in a multi-year kind of timeline of analyzing things. And that doesn't mean you're stupid, smart, or a Timmy, or a Rudy, or just a dumbass. It just means you're human and you don't have the experience of being at the bottom, the top, and understanding the difference of how you're supposed to look at things. Like right now, the reason I've been a positive Penelope is because I finally get to see 3 months of upticks in the magic world after 2 years of Chuck Norris at my back door. Is that a giggity at the back door? Nah, we're going to be fucking serious. And the same thing with Wall Street. People laughed at me. And then people say, oh my God, Rudy's talking about telling people to buy into the S&P. He's telling people to buy any form of sealed product all 2022, all 2023. And those people technically were correct. And I was wrong because anything you had bought Within 30 days, whether it's a sealed collector product, a sealed draft box of Magic, a sealed Pokemon box, or if you just bought the S&P, anything you had bought when I was yelling that you should buy, you would have lost money on within 30 days. And I remember telling you all, when you click the buy button, you will get punched in the face, and you need to accept that during the correct accumulation phases, as you buy things, you feel stupid and you feel like you're doing the wrong thing because everything you're buying, the price just goes lower. You cannot tell me, none of you out there have gone on your brokerage, I don't care, Bank of America, Goldman Sachs, Fidelity, E-Trade, Scottrade, Robinhood, Schwab, I don't care what you're in. You can't tell me, none of you out there have not said, wow, I've been wanting to buy that stock forever. I'm going to put 10 grand into that stock. And right when you click the button, the following day, the shit tanks and you go, are you serious? I've been waiting this whole time. I finally get in, and now the whole market takes a shit. You ever notice that's what everyone says? How many people you'll say, oh God, every time I do that, happens to me all the time, Rudy. No. That's a normal market. You're not supposed to click the button and it just goes up afterwards. You know, you're not Nostradamus. You're not from the future, bro. You're gonna buy stuff and it's gonna go down. And you shouldn't be angry at yourself for doing that. I get Patreon messages. We talk about finance stuff all the time. I probably, 30% of my Patreon messages are asking and discussing things like this with mortgages and credit cards and stock stuff. Which again, it's a good time to pause this video, ladies and gentlemen. This channel is sponsored by myself. If you want a Rudy Alpha Investment t-shirt, the back of the shirt says this shirt is worth more than your game pieces. I think we have some left. I apologize if there's none left by the time you watch this video. I should have at least 20 shirts. I think I may be down to one size, like XL only. I think everything's gone now. Also, if you want to be a Rudy patron, you can buy something from me once every 10 years, or you can just watch the behind-the-scenes mayhem of Rudy sales. You can ask me questions about, Rudy, are you really that bad of a scum? How many times have you hosed people? And I'll give you an exact number. You know, if you want to talk to me, or if you actually want to buy stuff, it's all up to you. I should have patron slots open because of how many patrons I've lost through the bear market, the MetaZoo collapse, the flesh and blood drama. I should have patron slots available from so many people who have left. I'm not going to hide it. I'm not going to pretend things are a certain way. No, on Alpha Investments, we like to tell you how it is, so we're all uncomfortable together. Because when we're all uncomfortable together, it's like a bonding experience, isn't it? We all kind of bond. That's what makes the videos good. It's like we're hanging out on a Friday night, folks. Anyways, to sum up the video, which means we're at the beginning, please keep a level head in mind. As Magic the Gathering recovers, and we're starting to see upticks in sealed boxes and all these new collector boxes, okay? And as we go into Fallout collectors, and you see what happens to the pricing, hint, please only order from places that you will not cancel your order, and please keep a level head. Do not get overly cocky if you bought, I don't know, Lord of the Rings special boxes from Rudy for, I don't know, $2.59 or $2.69, and you bought a case of 24 from me, and you're like, Rudy, those things are up like 60 bucks a box, and I bought like 24 boxes from you. Bro, I'm up like 2 grand in a month. Well, I'm happy, but please, that's great, but please understand, yes, the rising tide is happening, but do not use that as an excuse to over leverage or think you cracked the code to making money. You didn't crack the code to making money. I didn't crack the code to making money. Again, friendly reminder, if I knew the secret to being a billionaire or making endless money in trading stocks and Bitcoin, or if I knew it, I wouldn't tell you, because I'd be a gazillionaire with 45 chicks and 69 penis rockets with Jeff Bezos. My head would be shinier than Jeff Bezos. I would be hurting you all with the sun reflection from my bald spot to you all. But nobody has that. So anyone, do not look for the shortcuts. Okay? The markets are doing good. Okay? Rates have peaked. Rates are going to come down some. Stocks are going to do good. They're going to have slowdowns. They're going to be all over. Who cares? They're going to be fine. Magic is going to be fine. The sealed market, the new sets, they're probably going to go up. And they're probably going to be fine. But please keep a level head. A lot of you all will be new to this channel. New patrons and new viewers. And a lot of you have not been here for the last 2-3 years as we went through that bear market. So a lot of you all will not know what it's like to experience or see that downturn. So a lot of you all are going to have a false sense of security, or you will not understand the downside risk because a lot of people don't stick it through multiple cycles. The average human does one market cycle before changing hobbies, quitting, or of course, not investing in the stock market because it's all rigged and goes to zero in the S&P. You can't make money. Rudy, I did it for 3 years and I'm still flat. Yep, you went through a 2-year bear market and now you're finally starting to go up some, and most people gave up by now. So remember, folks, please use some common sense. Make your own decisions. Don't let Rudy talk you into anything. Don't let other people talk you out of anything. Look at it with a non-emotional perspective. Ask yourself, what kind of market are we in? What kind of market are we going to be moving into in the next year? What are the odds of a weak market or a strong market? And how much exposure? What kind of diversification? What's my personal life like? Is my chick going to pop out 7 more kids in 6 months? Is that possible? Or are things going to be calm and good? Is my life stable? Am I going to have 15 jobs to make $2 an hour? Or am I going to make 6 figures, 7 figures? Am I going to make $1 billion? Look at your situation. Look at your excess money. Put some reserve. Ask yourself, how much reserve? What's the worst thing that can happen? Medical bill? Injured? Can't work? Maybe get fired? Do you have a reserve to live before you can correct the life event? If so, anything past that, start looking to park to work for you in the future. Do not take too much risk. And it's like an athlete in the NFL, basketball, baseball, football, any of these things. Athletes sign these contracts, make tens of millions or hundreds of millions. And within 10 years, most athletes are dead broke because they over leverage, over risk. They get their sign-on bonus, they see the millions, and they don't understand that things shift. And you have to handle money carefully. The relationship between all of us and the relationship we have with money is a very dirty, sensitive thing that's not discussed enough. And that is where most people go wrong. There's nothing wrong with cards. There's nothing wrong with jets, and nothing wrong with video games, and nothing wrong with comic books, and nothing wrong with Bitcoin, houses, and the stock market. But too much of anything and not enough diversification is just silly. Don't be a Rudy and live in cardboard. All right, I think that's a good speech. We haven't really had a good financial talk in a while, and I wanted to bring that back today. And again, even going into this good market, and sure, most things are probably going to go up. Careful on the leverage. Make sure you understand what you're doing. I know, if things go up, everyone's just going to be... The more we swim in money, the more confident and cocky and the more hot stuff we think we are. You could be making millions, but just you got to keep a level head. Money does weird things to people, so make sure you guys kind of, also be careful who you associate with. Make sure you have good people around you. Good people always help push you to a more positive future and help give you more opportunities for good things. Have a beautiful day. Rudy's Penis.